We've been talking Australia and the trade numbers there. Let's see if we can get in touch with Joe Hockey, Shadow Treasurer in Australia. Mr. Hockey, are you with us?
Good morning.
Hey there. Thanks for being on the show. The market was looking for the trade deficit to balloon, but improvement in manufacturing helping somewhat. I mean, what's your take on those numbers we saw today?
Well, look, overall they seem to continue to indicate the Australian economy is performing a lot better than some expected, but I think clearly continuing to indicate that Australia is not going to go into recession. It is going to avoid the recession, and there's a whole lot of good reasons for that. But one of them is having a flexible currency, the demand for commodities out of China, particularly the commodities necessary to sort of make their Chinese fiscal stimulus work.
Mr. Hockey, you were against the stimulus package. I mean, now that Australia has avoided a recession, do you concede that you were wrong in your assessment?
Not at all, not at all. Australia has certainly not gone into the downturn that some were predicting, and there are a number of reasons for that. Firstly, we went into this downturn in far better shape than almost any other country. The government had no debt. In fact, it had $40 billion in net assets. We had growth of more than 4%. We had unemployment of just on 4%. And significantly, Australian financial institutions, primarily because of very good regulation, which we put in government, Australia's four major banks are amongst the top 12 in the world in terms of quality of asset base and also, importantly, profitability. So from our perspective, we believe Australia has been very well placed. And also one of the other things that people don't take into account internationally is that Australian interest rates were very high going in, or relatively high going in, to the downturn. The central bank cut the cash rate by 425 basis points. And in Australia, most Australians have variable home loans, which meant that the transmission to those homes of the massive cut in the cash rate was dramatic and had a big impact on consumers.
Mr. Hockey, I want to jump in here. Unemployment, still a big issue. We brought up the unemployment numbers just a little while ago. But you're calling for the stimulus plan to be reined in, the $42 billion that's being pumped into the economy. Why is that?
Well, because the government 2 years ago inherited an economy where only 24% of GDP was government spending, and they've increased it to over 28% of GDP. Australia has about the second or third largest stimulus spending program of any OECD country. And at the same time, the Reserve Bank, the central bank in Australia, cut interest rates more dramatically and by a larger margin than anyone else in the world except for New Zealand. So the combination of monetary and fiscal stimulus in the Australian economy that was already outperforming many of our competitors meant that there was a huge stimulus. Now, what you've got to do is pull back on that stimulus at the appropriate time so you don't crowd out the private sector. And our argument is if the government continues with its massive spending program out to 2013 and its massive borrowing program, which will go even longer, then that's going to crowd out the private sector and it's going to slow down growth.
Mr. Hockey, in about 20 seconds, how do you plan to create employment in Australia?
Well, the best way is to continue productivity growth, to focus on investment, new investment, and importantly, to stimulate small business. 70% of the Australian economy is services, not agriculture and mining, but services. And the big opportunity is exports into Asia of services. Best way to do that is to utilise good infrastructure.
Right. Joe Hockey, Shadow Treasurer in Australia. Thank you.